All right, so today we're diving into something that's both kind of exciting and a little bit dangerous.
Oh, sounds intriguing.
It is, it's day trading.
Ah, day
You
trading.
want to understand the basics, right? And maybe see if it's something you could actually try. So we're going to break it all down.
Okay, sounds good.
We're using this Investopedia article, Day Trading, the basics, and how to get started.
Great source.
Yeah, it's super up to date, just updated November 19th, 2024. So
Very recent.
we'll be uncovering things like the mysterious, quote, $25,000 rule
Yeah, I've heard of that.
and why the success rate is, well, surprisingly low.
Right, it's important to understand both the potential and the reality.
Exactly. So first things first.
Okay.
What exactly is day trading?
So day trading is all about buying and selling financial stuff. Stocks, currencies, all within the same trading day.
Okay. Within the same day.
Yeah, the goal is to make money from those tiny price changes that happen throughout the day.
Ah, so it's not about holding on to investments for like years.
Right, exactly. It's a very different approach than traditional, like long-term investing.
So day traders are constantly buying and selling.
Pretty much, yeah. They're not really focusing on a company's long-term potential,
I see.
but more like, taking advantage of those super rapid price swings.
Gotcha. So how do they even predict these swings?
Well, they rely a lot on technical analysis, which is
Mhm.
basically looking at charts and patterns
Ah, okay.
and then trying to, make educated guesses about where the market might go next.
Yeah. Okay. So that brings me to what always gets me about day trading, the idea of like quick profits.
Yeah, the allure of quick riches.
It sounds almost too good to be true.
Well, I hate to break it to you, but it's not as easy as some people make it seem.
So it's not just, buy low, sell high, and watch the money roll in.
Definitely not. Research suggests that less than 15% of day traders actually consistently make money.
Wow, less than 15%.
It's a tough game.
That's a reality check.
And then there's the psychological pressure. Imagine having to make split-second decisions constantly,
Oh, yeah, I bet.
constantly monitoring the market,
Yeah.
dealing with the emotional roller coaster of wins and losses. It's intense.
So you mentioned this $25,000 rule earlier.
Right.
Sounds like there's a financial hurdle to even get started.
Absolutely. This rule is all about protecting investors,
Okay,
especially newcomers.
I see.
It comes from regulations set by FINRA and the SEC.
Okay.
And basically, if you're classified as a pattern day trader,
What does that even mean?
it means you make like 4 or more day trades within 5 business days.
Okay.
You have to maintain a minimum balance of $25,000 in your account.
Ah, so you can't just jump in with like $100.
Nope. It's designed to make sure you can actually handle the potential losses.
Which we know are pretty common, right, with that less than 15% success rate?
Exactly.
So if my account dips below that 25,000, am I basically locked out of day trading?
That's right, until you add more money.
Interesting.
And it specifically applies to margin accounts, which is where it gets even more, complicated.
Margin accounts, those sound familiar.
Right. It's basically letting you borrow money from your broker to trade with.
So you're playing with like borrowed money.
Yeah, imagine having a $100 budget, but you can actually control $1,000 worth of stock
Wow.
using those borrowed funds.
So it magnifies everything.
Exactly. It magnifies gains and losses.
So a small increase could lead to a nice profit,
Right.
but a small dip could wipe out your initial investment.
Exactly. That's the risk.
Okay, I see how this is all connecting now.
Yeah, it's a lot to take in.
Now, the article also mentioned that professional day traders have access to like all these fancy tools and resources.
Oh, yeah, they definitely have an edge.
Yeah, it almost sounds a little intimidating.
It can be. Think of dedicated trading desks with super fast order execution.
Okay.
Real-time news feeds that arrive seconds before everyone else.
Wow, so they're getting information first.
Yeah, and analytical software that can spot patterns and even execute trades automatically.
So they're playing a different game altogether, it sounds like.
Pretty much, they have resources that most individual traders just don't.
But what about the rest of us?
Well, there are definitely various levels of trading software available.
Okay, so you don't need to be like a Wall Street wizard.
Not at all. But investing in the right tools is definitely essential.
Okay, so we've covered the basics, the risks, and the tech.
Right.
Now let's get to the part I'm really excited about, the strategies.
Okay, the fun part.
Yeah. What are some of the approaches day traders use to actually make money?
Well, there are a number of strategies, each with its own level of risk and reward.
I see.
Some common ones include scalping, swing trading, news-based trading.
Okay.
We can even touch on high-frequency trading, though that's mostly done by institutions like big players.
Right. Yeah, let's start with scalping.
Okay, scalping.
What does that even involve?
Imagine like a hummingbird darting from flower to flower, getting a tiny bit of nectar from each one.
Okay.
That's kind of like scalping.
Ah, so you're making like tons of tiny trades.
Numerous rapid trades throughout the day, trying to profit from those minuscule price changes.
So it's all about volume.
Yeah, it requires intense focus and a high tolerance for risk.
Because even small losses can add up, I imagine.
Exactly, that's the downside.
Okay. That sounds a little too intense for me. Maybe something a bit less hectic.
Sure, what about swing trading?
Okay, swing trading. Tell me about that.
It's more like catching a wave and riding it for a while before hopping off.
Okay, that's a good analogy.
You're looking for those short-term price swings, buying when a stock seems undervalued, and selling when it peaks.
Got it. So holding for a bit longer than scalping.
Yeah, usually within a few days or weeks.
Okay.
It's less frantic than scalping, but it still requires careful analysis and timing.
Right, makes sense. And then there's news-based trading. I've always wondered about this one.
Yeah, that's an interesting one.
It seems like reacting quickly to big news could be really profitable.
It definitely can be. This strategy is all about taking advantage of the market volatility that happens after major announcements, like company earnings reports or big economic data releases.
So you got to be in the know.
You have to be able to read the news, understand its potential impact, and predict how the market will react.
So you have to be quick on your feet.
Absolutely. The opportunity often disappears as soon as other traders catch on.
That makes sense. You got to be ahead of the curve.
Exactly.
Can we quickly touch on high-frequency trading before we move on?
Sure, high-frequency trading, or HFT, it's like day trading on steroids.
Okay, tell me more.
It uses super powerful algorithms and lightning-fast computers
Wow.
to exploit these tiny price differences that exist for like fractions of a second.
Fractions of a second.
Yeah, it's mind-bogglingly fast.
That's not something that, like, regular people can do.
Not really. It requires massive resources and technology,
Yeah.
usually only available to big institutions.
Okay, so we have scalping, swing trading, news-based trading, and HFT.
Those are some of the main ones.
I think I'm starting to get a feel for the different approaches. But can we actually walk through a real-life example? Like, how does a day trade actually play out?
Sure. The article uses a good example with a made-up company called Intuitive Sciences, Inc.
Okay.
ISI for short. They say a day trader notices that, ISI stock price tends to rise by at least 0.6% on days when the NASDAQ index is up more than 0.4%.
Okay, so they've spotted a pattern.
Exactly. So let's say they have a feeling today will be one of those days. They buy 1,000 shares of ISI at the market open, wait patiently until it hits their target price,
Which is?
up 0.6%, and then they immediately sell all their shares, locking in a profit.
Ah, okay.
Now, this is different from just buying a stock one day and selling it another. The $25,000 rule only applies when you buy and sell within the same trading day.
Right, because then it's considered a pattern day trade.
Exactly. It's all about those rapid buy and sell actions.
But the market could always go the other way, right?
Absolutely. What if ISI had dropped by 0.8% instead?
Oh, right.
The day trader would likely sell to, limit their losses.
So there's always that risk.
Always. A big part of day trading is managing that risk and minimizing losses.
Okay, now I'm curious about something else I've heard about. Options trading.
Options, yeah, that's a whole other world.
It seems like people who are interested in these short-term market movements are also interested in options.
Yeah, there's definitely overlap.
So how does that compare to day trading?
Well, options trading is kind of like betting on the future performance of an asset. It could be a stock, a commodity, even an index.
Okay.
You're buying contracts that give you the right, but not the obligation, to buy or sell that asset.
At a specific price.
Yeah, at a preset price within a certain time frame.
So instead of owning the asset, you're basically betting on whether its price will go up or down.
You got it, and that's where leverage comes in.
Ah, leverage again.
Yeah, with options, you can control a much larger position with less capital.
So even bigger potential profits?
Potentially, but also bigger potential losses.
Okay, so high risk, high reward.
Pretty much. It's like poker. You can win big or lose big.
I get it. So it's more complex than day trading.
It definitely is.
Yeah.
It involves concepts like implied volatility and the Greeks, which can be pretty confusing.
So options trading is a whole other level of complexity.
For sure. Maybe something to explore later on.
Yeah, maybe once we've mastered day trading, right?
Exactly. One step at a time.
Okay, so let's get back to day trading. If someone's listening to this, really interested, wanting to learn more, what should they do? What are some concrete steps?
Well, first things first, it's important to have realistic expectations.
Yeah, this is not a get-rich-quick scheme.
Definitely not. You mentioned earlier that most day traders actually lose money.
Right, less than 15% succeed.
And I see all these courses and ads promising huge profits.
Yeah, it's tempting.
So the question is, how can someone realistically overcome those odds?
That's the big question.
It takes work and a lot of learning.
So what would you say are the most important steps for someone who's serious about trying day trading?
Well, knowledge is key. You need to understand the market, how it works, what drives those price changes.
So hitting the books is step one.
Exactly. Learn about different trading strategies, technical analysis tools, risk management techniques. There are tons of resources out there.
Like what?
Websites like Investopedia, books, courses, even mentorship programs.
Okay, so after hitting the books, what's next?
Figure out how much risk you're comfortable with.
Risk tolerance.
Yeah, and how much money you can actually afford to lose.
Right, so no betting the farm?
Definitely not. Set those limits to protect yourself.
Got it. So knowledge, risk assessment, what else?
Practice, practice, practice. Before using real money, try a demo account or a simulator.
Like a test run.
Exactly. You can test out strategies, get a feel for the market without any financial risk.
That's smart.
Many online brokers offer these tools.
So it's like training wheels before you get on the real bike.
Perfect analogy.
So knowledge, risk assessment, practice, and then when you're ready to start with real money.
Start small, gradually increase your position size as you gain experience and confidence.
Okay, so slow and steady, even in the fast-paced world of day trading.
Exactly. Patience and discipline are key.
Right, and remember those emotional triggers we discussed earlier.
Oh yeah, fear and greed, they can really mess you up.
It's easy to get caught up in the moment.
It is, and make impulsive decisions, which can be very costly.
So having a plan and sticking to it is crucial.
Absolutely, regardless of how you're feeling in the moment.
But wouldn't some people say that big risks are how you get those big returns?
There's a difference between calculated risk and recklessness. It's about finding that sweet spot between being cautious and bold.
Okay, that makes sense.
You got to be smart about it.
So knowledge, risk management, practice, and emotional control.
Those are the key ingredients.
What about the ethical side of things?
Right, we have to talk about that.
The article briefly mentions some concerns about day trading.
Yeah, there are definitely some ethical considerations.
Can you shed some light on those?
One concern is the number of scams that target new investors.
People looking for easy money.
Exactly, and unfortunately there are people who take advantage of that.
So it's like any field where money's involved, buyer beware.
Absolutely. Do your research. Be careful who you trust.
What are some other criticisms of day trading?
Well, some argue that the low success rate makes it a bad choice for most people.
Right, that less than 15% again.
Yeah, and some financial experts suggest passive investing strategies, like index funds.
I've heard those are good for the long term.
Exactly. They tend to perform better over time. They argue that trying to consistently beat the market is nearly impossible.
It's like the tortoise and the hare. Slow and steady wins the race.
Exactly. Day trading can be profitable for a select few, but it's important to understand the odds.
Okay, scams and the low success rate. Anything else?
Some people also believe that day traders can actually make the market more volatile.
Making it harder for those long-term investors.
Exactly, but others argue that day traders actually help make the market more efficient.
Okay, so there's two sides to that coin.
By providing liquidity, basically making sure there are always buyers and sellers available.
So it's a complex issue.
It is, with valid arguments on all sides.
Well, I think we've done a good job unpacking the world of day trading so far, at least for part one.
We've covered a lot of ground.
We have the basics, the strategies, the risks, the psychological aspects, even some ethical considerations.
It's a lot to digest.
So what would you say are the most important takeaways for someone who's considering dipping their toes into day trading?
I would say the most important takeaway is that day trading is not a game of chance.
Okay.
It's a skill-based endeavor that requires dedication, discipline, and a willingness to learn and adapt.
So it's a journey.
It is, and it's important to approach it with realistic expectations, understanding that the journey to success is paved with both wins and losses.
That's great advice. And speaking of journeys, we'll be continuing ours in part 2 of this deep dive,
Looking forward to it.
where we'll explore even more insights and resources.
We'll go deeper into some of the practical aspects.
Awesome. So make sure to join us for part 2 as we continue exploring this exciting and challenging world of day trading.
See you there.
Welcome back to our deep dive into day trading. I'm really starting to understand just how complex this world is.
It definitely is. It's so much more than just buying low and selling high.
Right, exactly. Like our Investopedia article emphasized, discipline is super important.
Yeah, you can't just rely on gut feelings, especially in such an unpredictable market.
So what exactly goes into creating a solid day trading plan?
Well, a good plan should cover a few key areas. First, you need to define your goals. What are you hoping to achieve with this? Consistent profits, or are you aiming for bigger wins?
It sounds like any other goal-setting process. You got to know where you're going.
Exactly. And once you have your goals, you can figure out how much risk you're comfortable with.
Okay, so goals and risk tolerance. What else?
Next, choose your trading strategy, which means analyzing market data, identifying opportunities, and setting rules for when to buy and sell.
Right, and that's where technical analysis comes in.
Exactly. Using those charts and patterns to try and predict future price movements.
It can get pretty complex, I imagine.
It can, but there are basic tools even beginners can learn.
So you're not just reacting to the market, you're trying to anticipate it.
Right. It's all about timing, getting in and out of trades at those precise moments.
And of course, you need the right tools and software.
Absolutely. There's charting software, real-time news feeds, even technical indicators.
And so it's a lot to keep track of.
It is, but even with the best tools, success ultimately comes down to knowledge, skill, and that discipline.
Speaking of discipline, that Investopedia article really hammered home risk management.
Yeah, one of the biggest keys to success.
What are some specific techniques day traders use to protect themselves?
One essential technique is setting stop-loss orders.
Stop-loss orders.
It's like an automatic safety net. You set a specific price at which your position will be sold if the market moves against you.
So you're limiting your potential losses.
Exactly. It prevents small losses from becoming huge ones.
That's a relief.
And it takes emotion out of the equation, which is crucial when things are moving fast.
Okay, stop-loss orders, any other risk management tools?
Position sizing is important. Figuring out how much money to put into each trade.
Don't put all your eggs in one basket.
Precisely. Spread out that risk. Don't overextend yourself.
We talked about margin accounts before, but I still have some questions.
Sure. What do you want to know?
Remind me how those work and what the risks are.
Margin accounts let you borrow money from your broker to trade.
Right, like a line of credit.
Exactly. But it's risky because it amplifies both gains and losses.
So if my trades go well, I make more, but if they go badly?
You can lose more than your initial investment.
And you mentioned something called a margin call.
Right, when your losses hit a certain limit, the broker demands you deposit more money.
To cover those losses.
Exactly. It can be pretty stressful.
I bet. So margin trading isn't for the faint of heart.
It's a tool to be used cautiously. Definitely not for beginners.
Okay, we've talked about the technical stuff, but what about the mental game? How do you handle the pressure of day trading?
It's definitely demanding. Mentally and emotionally, you're constantly facing uncertainty and risk.
Sounds intense.
It is. Successful day traders need strong emotional control.
So they can't panic when things go wrong.
Exactly. They have to stick to their plan, even when emotions are running high.
So what else makes a good day trader?
They have a high tolerance for risk, knowing losses are part of the game.
And they learn from those losses.
Exactly. They're always adapting, always learning, trying to improve their skills.
So it's not just about being good with numbers, it's about mindset.
It's a combination of both technical skills and the right mental approach.
That makes sense. So how does someone actually get started?
First step, find a reputable broker.
Okay. Any tips on choosing one?
Look for a reliable platform, fast execution, real-time data, a good range of tools.
And reasonable fees, of course.
Definitely. Compare the costs across different brokers.
So reliability, speed, tools, and costs. Got it.
Then open an account, fund it, and practice on a demo account before you use real money.
So those are the essential first steps. Find a broker, open an account, fund it, and practice.
That's the gist of it. And remember, never stop learning.
Because the market is always changing.
Exactly. Continuous education is key.
Well, we've covered a lot in this part of our deep dive. Creating a plan, managing risk, the psychological side, even the practical steps.
It's a lot to take in, but hopefully it's helpful for anyone considering day trading.
Definitely. Any final thoughts before we move on?
Day trading is a journey, not a destination. It takes time, dedication, and a willingness to learn from your mistakes.
Great advice. So join us for part 3, where we'll explore different types of markets beyond just stocks.
We'll wrap up our exploration of this fascinating field.
Welcome back to our deep dive. We've covered so much about day trading already, the strategies, the risks, even the mental game.
Yeah, it's been quite a journey.
It really has. And one thing that keeps coming up is how fast-paced this all is.
Yeah, it's a whirlwind.
It makes me think about the different markets day traders are in. You mentioned it's not just stocks.
Right. There's a whole universe of assets out there. People trade them every single day.
So besides stocks, what else is popular?
One of the biggest is Forex, the foreign exchange market.
Forex, where currencies are trading.
Exactly, like dollars, euros, yen, all that.
I can only imagine how much those rates fluctuate.
It's a constant dance, up and down all day long.
With all the global news and events, it must be wild.
It's definitely a fast-moving market, actually. Forex is the largest and most liquid financial market in the world.
Wow, the largest.
Open 24 hours a day, 5 days a week.
245, that's nonstop action.
Pretty much, it never sleeps.
Besides the constant activity, what else draws people to Forex?
Leverage is a big one. Remember we talked about using borrowed money to amplify your trades?
Yeah, margin accounts.
Well, leverage is huge in Forex. Some brokers let you control big positions with a small amount of capital.
So like that $100 controlling a $1,000 example.
Exactly. But remember, it magnifies losses, too.
High risk, high reward.
You got it.
Okay, stocks, Forex, what else?
Futures contracts are popular. Those are agreements to buy or sell an asset at a set price on a future date.
So if I think gold will go up next month, I could lock in today's price with a futures contract.
That's the basic idea. And day traders in futures are always looking for those price swings. Buy low, sell high, within the same day.
It's fascinating how these same principles apply across different markets.
That's the beauty of it. It's all about spotting those opportunities and acting fast.
As we wrap up this deep dive, I keep thinking about how much knowledge is crucial for day trading.
It can't be overstated. It's the foundation of everything.
It's not about luck, it's about skill.
Exactly. So what advice would you give someone who's really considering giving this a try?
That's a great question.
Be realistic. Day trading is challenging. It demands technical skills, emotional intelligence, a strong work ethic.
It's not a hobby, it's a profession.
Precisely. Be ready to put in the time to learn. There are tons of resources out there.
Investopedia has been a great guide for us.
They're a fantastic resource. Highly recommend them.
Well, we've covered so much. The basics, strategies, risks, the mental game, even different markets.
I think the biggest takeaway is that day trading is active. It's not passive. You have to be engaged, constantly learning, ready for the ups and downs.
It's a journey, not a sprint.
Well said. Day trading might not be for everyone, but for those who are ready to put in the work, it can be incredibly rewarding.
Absolutely. It's been a fascinating deep dive for me, learning all about this dynamic world.
Glad you enjoyed it.
For anyone listening who's now intrigued, remember, do your research, be prepared to learn, and approach the market carefully.
Sound advice.
And with that, we'll wrap up our deep dive into day trading. Thanks for joining us, and until next time, happy investing.